Madam Josephine, go ahead. I have a challenge with my Kenneth. Could you Paul. Paul.
Yes.
Yes.
Wonderful. Our topic will be on the general insurance today. Is our second topic. And I said broadly in the first topic that insurance is divided into two broad categories. You have the life assurance or the insurance for life, and we have now the general insurance. And the general insurance is basically dependent on the risk that you are insuring yourself against. If you're insuring yourself against loss through fire, we call it fire insurance. If it is accident, we call it motor vehicle or the accident insurance. If you want to cushion the third parties or damage to third parties, we call it third party insurance, etc. So we have the life assurance and we have the general insurance. And I'll say general insurance is categorized into the risk or is dependent on the risk that you are cushioning yourself against. So today we'll be looking into the accounts of the general insurance companies. And in this case, we'll be looking at the different segments of the business. So we have the revenue accounts, the ones again drawn in the general insurance business. Then we have a profit and loss account, which is also drawn. Of course, being a business, we expect that at the end of the year, the business has made some profit. And that is why we indicated, when we were talking about the revenue account, I indicated that like it's a must for the credit balance to be more than the debit balance. Now, the credits are the revenues or the forms of income that we get from the insurance business. And these are the annuities or the premiums that people do pay. We could be having the fines, we could be having the registration fees, could be having the interest that we are receiving from the interest that we are receiving from the reinsurance company or the commissions from the business that you have taken on the other insurance companies as reinsurance, etc. So it's a must that the credit balance be over and above the debit balance so that you realize a profit. Otherwise, you won't be in any business. You'll be just paying claims, and ultimately you'll start eating into the shareholders' equity. So as an accounting student, that would be a business. I don't know whether my screen is big enough. Let me try to expand it. Again, that's too much. I think that's good. I don't intend to boggle it. So we start. So we are drawing the revenue account. We have the profit and loss account. And I want to take you through the differences or the major differences that exist now between the general insurance and the life insurance. And one of the difference is the balance brought forward. In life assurance, the life assurance fund brought forward is the amount that will be realized now after we subtract all the debits. So in our next year, or when we are starting the year, we do expect to have the life assurance fund brought forward. But in general insurance, these are very different. Whatever we start with is the provision for an expired risk, because as I have indicated, the life insurance will cover you for a long duration. So you can say it is seasonal, it extends. You can imagine if you are let's say, covering yourself until you retire and you started working at the age of 28. That's quite some period of years. But if you go for a motor vehicle insurance, let's say, it has to be 1 year and then it lapses. Now, this 1 year does not necessarily, let's say the accounting period for the general insurance company is running from January to December. So we have those customers who will come, let's say on 1st January, which is okay. Some will come in mid-March, some July, some August, some November, some December. And this is a very risky business because you can buy a car from the car bazaar and before you even make 10 kilometers, you've already gotten an accident. What does that mean? You haven't even cleared 1 month. You've just joined the insurance company and you are here. You are claiming to be paid and they will pay. So when we are talking of the balance brought forward, it will be merely a provision for the unexpired risk. If you are not hit by the risk, it doesn't mean that it won't recur when we start next year. For those people who join somewhere in September, we expect that they had cushioned themselves and the expiry date will be September next year. Secondly, general insurance may have additional reserve over and above the provision for unexpired risk. And I've said, for example, if you have, let's say, cushioned yourself, you are in a comprehensive insurance cover, and let's say your premiums is 80,000. That is what you are paying per annum to cushion yourself against the motor vehicle accident. And then you get into an accident where your vehicle needs to be brought back to normal, you need like 400,000. So where will the 320,000 come from? Of course, we must have some reserve from the general insurance company to cushion you against that amount over and above your comprehensive insurance motor vehicle cover. Then thirdly, in life assurance, an amount is not drawn out as profit. So we don't transfer any amount to the profit and loss account. Instead, there is some valuation that involves a lot of actuarial mathematics to try and spread the premiums as stipulated in the policy across the period to ensure that the business does not lose. Later on, we'll be looking into that. If you are not able to look into that at this level, then you are going to cover it at master's level. And then from there, in general insurance, we know that the amount that is drawn each year is merely the profit for the business for that particular year. Though we have the unexpired risk, we know that whatever we have cushioned ourselves against, depending on the trend analysis, will be in business for unforeseen future, our business being a going concern. So we go on. So general insurance is as business as any other business, and therefore each segment of the business will prepare the revenue account. So we convert each department. For example, let's say we have the fire insurance, we have marine insurance, we have motor vehicle insurance, etc. All these different sectors of the business will be operating as revenue centers. A revenue center to mean we expect them to prepare their own set book of accounts and report whether they got a profit or a loss. Kindly, when you join, mute yourself. When you join, kindly mute yourself to avoid interrupting the class. Do you have any issue? Am I audible? You can make use of the 3 buttons down there, depending on the gadget you are using. So you can make use of the chat button and let me know where or whether there is an issue that needs to be attended to. So we'll go on. I've said that each segment of the business is taken as an independent revenue center. So when we are posting for the end of year statements, we'll be preparing different sets of business for each revenue center. We may amalgamate them, but each revenue center is supposed to report their set of accounts to know whether it was profitable or otherwise. So policies are issued throughout the year, like I have indicated. So what you are supposed to know is the provisions. For example, the provision for the marine insurance is supposed to be 100%. If you recall the historical Titanic ship, even the owner was trying to, he had the bragging rights of saying not even God can sink it. But when the accident came, they lost everything. Even the people who were on board, not even one survived. So for marine insurance, we provide for 100%. And then we do 50% to be on the good side. We normally do, the law requires to provide for 40%, but we give an additional reserve of like 10% to ensure that we are in a good standing. Yes? Who is on order? Who is on point of order? So we are here. This is the format of the revenue account. And you can see in the format of the revenue account, we have on the credit side, can see our balance brought forward. We have the provision for the unexpired risk. We have the premiums. We less the reinsurance. And we said reinsurance is the value that you see the business at times will cushion itself against any occurrences. So when a company accepts a business of more value and they want to reduce that risk, they may pass it to the other company. And this is what we are calling the reinsurance. So the business that is passed on will earn us a commission. So we'll get some commissions, and we call this commission on reinsurance business seeded. And this is the commission that you are seeing down there. Of course, you've deducted all the taxes that we need to pay. And then the company which accepts such business is required to pay commission on reinsurance business accepted. So when you go on the other side, we are supposed now to debit, because it is an expense. We are supposed to debit the commission on reinsurance business accepted. But this entry here, it is an expense, so it's a debit. But the commission on reinsurance ceded, because we'll be getting commission, it is an income at the end of the year. So we are going to post it there. So without wasting more time, practice makes perfect. So I'd want us to go and do the practical example. We can do it together here. So the reserve for the unexpired risk, or what we are calling the provision for unexpired risk, is our fund balance that was brought forward. So we expect once we close the books, the carried forward will be our funds balance brought forward at the start of the next year. Then we've said that the additional reserve may be maintained to cushion ourselves against, in line with the prudence concept. We are not supposed to overstate or understate our revenues and costs. Therefore, to be in good standing, it's good to have an additional reserve. And then for the reinsurance, I've indicated there that there are those companies that will be willing to cushion the insurance company against any risk. So you have an illustration there, and it is worked out. So that one cannot be a good example for learning. Let us take the practical example here. So as I have indicated, each segment of the business will be taken as an independent revenue center. So we are going to prepare revenue account for each set of for each segment of business. And as you can see here, we have the engineering insurance, we have the motor vehicle insurance, we have the personal accident insurance, we have the marine. There are 4 segments of business. So when we'll be doing our revenue account, I want to see whether they are alike. So you can see what is happening. I think the examiner is doing this deliberately to make the work of the student easy. So we have the net premium written in all the segments. We have the unearned in all the segments. We have the, so it's very easy. So I want us to go ahead and prepare the, I want you to go through the question. You have your notes, isn't it? Tim, you have your notes. You have your notes. Jacqueline, you have your notes. I want you to open that question so that I want to start sharing an Excel workbook so that we work together. So I want people to open the question on the end so that I stop sharing. So those who have joined, welcome. I want to reiterate that you people, in our last class, I said that we'll be having the specialized accounting from 8 to 11. I have another lecture from 2 to 5. So it was clashing in the timetable. And that is why this class is supposed to be held from 8 to 11. Are we in agreement? Are we in agreement? Do you have a class from 8 to 11? You don't. That's why the timetabler moved this class from 8 to 11. So I'm just buying some time for you people to open the question from the ZDS.
For medicine. Haipitishi sauti, sijui ni mimi peke yangu.
Can you hear me?
Ilikuwa side ya nini? Ya lecturer.
Can you hear me?
Ya lecturer.
Tuko sawa? Okay, I said we open the question. Have we? Zipporah, you have the question?
Yes.
So we are doing it together. And I've said we start by each department. I've realized that I was on mute, so you are not getting me. So each segment of the business, we have the 4 segments. We have the engineering, motor vehicle, the personal accident, and the marine segment. We are going to prepare different set of accounts, revenue accounts. And this is what we are posting right now. So I've indicated that we have the net premium, and it is given there, 40, 64, 70, then 96, 700, which is totaling to 270,700. Then our unearned premium, we are given there. We have 7,2, 18,5, we have 10,400 and 24,000. The unearned premium as at the end of the year will be subtracted because it hasn't been earned yet. So that's why you've been given the percentages. You are given the percentages. If you look at the part A of the additional information, we are told that the company calculates, I had shared that. We are told that the company calculates earned premium on the following basis: 30% of engineering insurance, and that is what has given us 12,000. We have 25%, that is what has given us 16,000. We have the 40%, that's what has given us the 28,000, and we have the 45%, and that is what has given us 43,515, which is totaling to 99,515. Then we go to the net earned premium. You've been given the figures for the net earned premium. We'll just put the figures as they appear there. Do you have the figures?
Yes.
So it will be 40 plus the 7,2, then we subtract subtract the 12,000, and we get the figures. So we are totaling. So what will you get for the motor vehicle? Motor vehicle? Now we should be together. Motor vehicle, what are you getting for motor vehicle?
$66,500.
66,500. Thank you. Then for the personal accident, When someone is doing for motor vehicle, you should be having some person who is doing for the personal accident, so that we save on the time.
52,400.
52,400. Then we have for the marine. You won't be useful in this class if you don't have your calculator.
$107,185.
107,
sorry.
185. We have a subtraction.
Is this the God?
That is 43,515.
It's 77,185.
77?
185.
77, 185. Then we go to the claims that were paid. We go to the claims that were paid. You have the claims that were paid for the engineering. The claims that were paid are debited. It's an expense. It is 96. For the motor vehicle, claims that were paid is 46,500. So you can see where the business of insurance is. For the personal accident, we have 21,650. And then for the marine, we have 56,400, right? Then from there, we have the outstanding claims as at the start of the year on 1st January 2019. And the figures are stipulated there. Are we going to deduct or add this figure? Are we going to deduct or are we going to add the outstanding claims? Have they been paid? They haven't been paid. So we are going to deduct, right? So we are deducting 1,400. Then for the motor vehicle, we have the outstanding is 24,000. For the personal accident, the outstanding claim is 36. And for the marine, the outstanding claim is 13,500. Are we there? So I want the figures for the outstanding claims as at 31st December. As at 31st December. We've been given the figures down there. It is our part B of the additional information. So we have 2,3. Then for the motor vehicle, it is 27,500. For the personal accident, it is 4,450. And for the marine, it is 17,550. Is that okay? So that should give us now the figures for the total claims. So we'll be adding the 96, we subtract 14, then we add back 23. What are we going to get for the first, for the engineering insurance?
45,700.
Where did that come from? We are doing the figures for claims only. So claims paid, we subtract the outstanding, we add back the outstanding claims as at the end of the year. So it will be 96 plus 14, not plus, minus 14 plus 23. We are getting
10,500.
10,500. Yeah. Then 46,500 less 24,000. Then we add back 27,500.
50,000.
Yes? 50,000. Then we have for personal accident, 21,650, we less 36, we add 4,450.
22,500.
22,500. Then for marine, we have 56,400 minus 13,500, we add back 17,550.
60,450.
60,450. Right? Then we go now to the commissions. We have the commissions, let me see, from the question. We have the commissions for the engineering, it is 7,2. For the motor vehicle, the commission was 8,6. For the personal accident, the commission is 8,1. And for the marine, the commissions are 2,1. 2,1. Right? Then we have the expenses for management. We have the expenses for the management. The figure has been given. So you have 3,1. Then we have 8,6 for motor vehicle. Did I get the right figure? No, this figure is supposed to be 12,4, sorry.
Yeah.
So personal accident is 10,3. And then expenses for marine is 18,450. Are we there? So what are we going to get as the end product? What will be our end product? What will be our end product? What is commissions plus the expenses of management? Should give us the figures for total expenses, isn't it? So I need to have
300 ya engineering.
So this should be now the total expenses. And the total expenses will be now these two. So we are getting this cell. Let's get the sum.
Itakuwa 10,300.
And then we can pull the formula. There we are, right? So our total will be, now this one will be the sum of the total expenses. Just make use of the formula. So our sum is 70,250. Is it? Are we okay?
Yes.
I'm just trying to look at the commission. There is one commission there that is negated. You can see the commission for marine. The commission for marine is on the credit hand side, isn't it? So this one is supposed to be a negative, not a positive. Just cross-checking. So there we are. Don't see any other figure that has been misposted. So those are the items of the revenue account for the year ended 31st December 2019. So whatever we are going to get down here will be either the profit or the loss, right? So this will be our balance of underwriting, and it is a profit or a loss. If it is a negative figure, it will be a profit. It will be a loss. If it will be a positive figure, it will be a profit on underwriting. So balance of underwriting, and this is the figures that will be taken to the statement of income and expenditure. So what are you going to get for the first item? We have the net earned premium, and we are lessing all the other amount. What are you getting?
It was 14,400.
14,400. Positive or negative?
It's positive.
So it's a profit, right? So you can say engineering insurance gave us a profit of 14,400. Then for the motor vehicle,
Gave us 4,500, which is a loss.
a loss of 4,500. So you can see how tricky it is to do the motor vehicle insurance, right? But do they necessarily make a loss? Before that claim is paid, I'm telling you, the insurance guys will have pushed you to the end, isn't it? For the personal accident,
It is 11,500 profit.
a profit of 11,500. Then we have for the marine,
385 profit.
385.
Yes, profit. Oh, not
385, sorry, 385. And then overall, we are just getting the totals. So it will be some to know how the business was overall. So we are getting a profit of, is it negative?
Yeah, nimepata negative 2400.
No, which totals are you adding? We are adding the totals for the balance of underwriting. You cannot add the other totals.
Okay.
Looking at the 14,400, these are our profits and losses, isn't it? To know the net profit or loss, we'll add the 14,400 minus 45 plus 11,500 plus 385.
Okay.
So you can see that is the revenue account. We have posted a profit of 21,700, but it's not even thousand, it is million, because our figures up there is in thousands, isn't it? So we've posted a profit of 21,785,000. So this is the figure that we'll take as profit transferred from the general underwriting. And this figure will be now our item, the statement of comprehensive income for the year ended 31st December 2019, right? So can we go ahead and prepare now the statement of comprehensive income? Statement of the comprehensive income. And that should be easy once we've gotten the figure for the revenue account. All the other figures that we are going to get there are in the question. They are in our trial balance. Just confirming whether I can see all the items. All the items of the statement of comprehensive income are appearing in our question. Because we have the interest and investment income, which should be the figure that we'll be using to post on whether who is laughing? Who is laughing to share with us? I'm trying to transfer the figures in my Excel. I want to copy paste so that it's easier for us. So the expenses we have, auditors' fees, we got legal fees, we got depreciation on buildings, motor vehicles, computer equipment, and furniture and fittings. So with that, we are able to get now the EBIT, or the earnings before income tax. And then we have the taxation. And that should give us now the figures for the retained profits. Yeah, so we have that. So I think we are good. This in thousands. Are we there, guys? So this is how our statement of comprehensive income for the year or for White Shield General Insurance Company will look like. So on the income side, we have the profit that was transferred from the general underwriting. What was that figure again? It was 20. Someone read the figure for me.
21,700.
So it was 21,765. We go on. I need to make this. So we go. Then revenue account. We've been given the figure. So this is the. Should have put this amount down here.
This 685, almost 785.
Is it 685 or 785?
785.
785.
85.
21,785. Then we have the interest and investment income. We've been given that figure. What is it? The figure is in the question. The interest and investment income is 115,000, right?
Yes.
So 115,000. So our total income will be this plus this. So it is 136,785, right? Then we go to the expenses. What are the auditor's fees? The auditor's fees, given provision for auditor's fees is 5 million and the legal fees is 1,250,000, right? So this 5 million and this is 1,250. Then you go now to the depreciation of the non-current assets. You have the buildings. What was the value of the building? You've been given the provision for depreciation and we've been told that it is made using the straight line method. And the rates have been given down there. You have buildings 2%, motor vehicle 20%, computer equipment is 15%, furniture and fixtures is 5%. And the value of the motor vehicle, the value of the building is 327,500. I'm waiting for the depreciation figures. We are using straight line. What's the formula for straight line method of depreciation? Then give me the figure.
That's 6,550, I think.
What are you getting for the building?
$6,550.
6,550.
Ndio chenye nimepata.
How did you arrive at that?
John, ongea.
John, talk.
Maiye.
John, talk.
Okay, I think the duration is 1 year
Mm-hmm.
and the percentage is 2%.
Mm-hmm.
And the value we were given was, I think, let me check, 327,500.
Mm-hmm.
So I took the duration was, I took the duration as 1 year and the amount times the rate.
Mm-hmm.
Yes.
Who got a different figure for depreciation? But up there, you see, we have the depreciation for the previous year. And with the depreciation, if you look at the depreciation that we are given, it dates back in January, isn't it? The depreciation figure was 17,000 as at 1st January 2019. What is the formula for straight line depreciation? Elders, you've forgotten these things.
Badaka inakwanga cost minus salvage value over hiyo year. Ama ni ngapi? Watu wamenyamaza.
Imagine, people are quiet.
Simuongee. Nyinyi watu mko aje? Cost minus salvage value over years. Hebu acha niangalie. John, ongea.
Okay, I would say for the straight line method, it is the cost of the asset
Minus salvage.
minus the book value over the useful life of the asset.
So what is our salvage value as at the end of that year?
Angalia kwa question. John amenyamaza tena. Nyinyi watu mko aje?
Ndio naangalia kwa question.
Salvage value ni kama book value.
Yes.
Can calculate.
Okay.
So in the interest of time, can we go to the, now all the other items you now need to fix. You see, once you fix the depreciation, whatever you are going to get is EBIT, is our profit before tax, isn't it?
Tuna subtract taxation.
And then you subtract taxation to get the profit after
Taxation. Then you
taxation.
get the
Then you add the retained profits, and you've been given that figure up there, right? So the last book of account is supposed to be statement of financial position or the balance sheet. And you see, without the figures for the depreciation, we are not going anywhere, isn't it? So can you get the figures for depreciation? Because the statement of financial position, we have everything else except depreciation. We have the figures for, and we have the current assets, and we have the liabilities, isn't it? So we are stuck. You have to give me those figures. I can see people have forgotten. I didn't expect at this level to start arguing about the straight line method. So can we leave it at that? My time is over. Can see the, in 2 minutes time, this will be brought to a close. So can you do that and share in the portal?
Sasa nitoke niangalie kwa question.
So I'll give you some time to work on it. And then the figures that we'll get, you see, we've been given the cost. So we need to subtract the depreciation to get the net book value for us to get now the total non-current assets. And then what you are supposed to know is that investment will be part of the asset. These are real estate, these are insurance, it's an insurance business. So after we get the fixed assets, will be followed by the investments. And then from there now we go to the, we've been given the figures for share capital. We have the retained earnings. We have the accrued expenses. And we also have we have taxation, and you have the sundry creditors. And we'll have gotten now the statement of the financial position as at 31st December 2019. So without further ado, I will collapse this meeting or this class. We now navigate through the portal. And I realize there are people who are not active in the portal. Kindly note that being active in the portal is what earns you a positive. This class have been, the active people have been Zipporah and John. I don't know where the other Kenyans are. They decided to mute. They decided to keep quiet. Ogutu Steve, are you there? Ogutu Steve? Paul? Njuguna? Dumia? My assumption will be if you don't say present, most likely you are not there. Kubende?
Present.
Judy Nzioka?
I'm present.
Evelyn Duati?
Hey.
Evelyn Duati?
Present.
Well, let us respond to the portal, through the portal, right? Any question from your end? Any question? So thank you for your time. Let us meet in the portal.